All right, good afternoon, everyone. This is Escobar. Real quick, this is Escobar. Hopefully, you guys are doing well. And I just want to point out this is this video is titled "The Stop Hunts." I'm gonna try to simplify this real quick, and let's not overcomplicate this. Okay, for my new beginner traders, what's a stop hunt? The stop hunt is the false move against the real market trend. The stop hunt is the false move against the real intentions. Okay. That's all you need to know, that the stop hunt most likely is going to lead to the true trend of the market. Okay. So right off the top, what's a stop hunt? A stop hunt is a game that the market makers play a trick on us. They push the price up or down very quickly. Okay. Basically, what they're going to do with that stop hunt is they're going to knock out traders out the game by hitting their stop losses. That's why it's called a stop loss. And normally the stop hunts are fixed 25 to 50 pips. You know, when you're learning how to trade, a lot of textbooks tells you to set your 25 to 50 pip stop loss. It's like a fixed number that they come up with. So anyhow, if you take a trade earlier than, before London Open, you're probably putting a 25 pip stop loss or a 50 pip stop loss. Anything less than that is automatically going to, most likely going to get knocked out, is going to get stop hunted out when London opens. And London is where you're going to get your high of the day or low of the day. Okay. So anyhow, and sometimes again, even the stop hunt, a lot of people look at it as a breakout. That gets people to jump in the wrong direction so they can reverse the price and move on and go about their business. Okay. So how does this work? The market usually does this with three moves. Okay. These they're going to set the high of the day or the low of the day. So basically, the high of the day is the highest or the lowest point on the price on the chart for that day. Okay. And I'm going to point out some clues to you to see if you're able to see this. If you already know what the stop hunt is, then more power to you. But if you're brand new and you're struggling, I'm going to show you something simple real quick. So let's get to the chart here. Okay. So what happens at the high of the day, low of the day? The market makers pretend that the price is going to break out in one direction just to get the traders excited. After that, they're going to, make the spread or even get bigger right around that time, right around London Open, or right when they're getting ready to make the real move. Okay. And if they don't trick enough traders to bite on that false breakout, that fake stop hunt, they're going to extend the stop hunt, by another 25 to 50 points. Then they're going to set up that M pattern, that W pattern. Okay. So let's get right to it. Let's look at the chart real quick and let's just keep this very simple. Let me grab a pen here. Okay. Here are my boxes. These boxes are set. They're fixed. 25 points from this is my agent session in here. Let me zoom in a little bit more, make this more clear for you. Give me 1 second here. Okay. Let me zoom in. I'm on the 1 hour because I want to show you the big picture. Okay. So you can see that not every day there's a setup every day. There isn't a setup every single day. Sometimes there might be one or two possible setups if you trade the method. Okay. So let's look at some key factors here. I'm going to grab my pen. I'm on the 1 hour. Okay. Uh, Okay. You guys already know this is Friday going into Monday. So this shadow line right here, this vertical line is Sunday. Market opens up here. This is my Asian session. You guys already know that. London is right in here. Then it's the New York session in here. Okay. This applies to London only because that's where the high of the day or the low of the day will come in at. Again, when the Asian, let me explain these boxes up there. From the high, the initial high of Asia, that's the high right there. From here to the bottom of my stop hunt is 25 points. From the initial high in here in Asia to the top of my stop hunt is 50 points. Okay. All that's on purpose and vice versa. From the low, the initial low in Asia to the top of my stop hunt is 25 points. It's all in reverse. From the initial low in Asia to the bottom of my stop hunt is 50 points because everyone is taught to put a 50 to 25 to 50 point stop loss. That's why they're set up like that. So with that being said, let's point out where were the stop hunts, which is the false move against the real intentions, where this entire week, we're already on Tuesday afternoon going into Wednesday, right? So last night in London, price went up here. If you're a brand new trader, that's not a trade for you because I want you to take the easy stuff when it goes up here. Sets the stop hunt high, drop. I'm going to repeat myself. The stop hunt is the false move against the real intentions. Okay. Let's clear this up. So let's go back and then we'll break down the setup. I'm on the 1 hour just to get the big picture. For this entire week so far, for the week beginning, where was the stop hunt? What day? There was only one good trade there for you, which was Sunday night going into Monday. Consolidation, stop hunt, the false move against the real intentions, entry, and it rised. This applies to every currency pair. Okay, we'll break that down. Let's go to the following week, the previous week. Okay, if I look at my previous week, which was Sunday to Sunday, where was the best possible setup for this entire week? Okay, when Sunday opened, price went up here. You're thinking stop hunt high. That's my stop hunt zone. I'm looking to sell basically anything for my new people. Anything in here, I'm looking to sell in the right market conditions. It kept rising. Anything down here, it's a buy position. Stop hunt low, you buy. Obviously, right here, it didn't work out. Why? It all is because TDI will clean that up for you. We're not going to get involved into TDI. I just want you to see what happens when they hit the stops and it goes into the opposite direction. Okay, so there was no trade there. Consolidation. Price broke to the upside a little bit here, a little shadows, a little false little breakout. Price drops. We'll break that down. The following day, consolidation. You're probably thinking stop on high. It went into the stop on high. You're thinking it should drop. It didn't drop. There is no confirmation to sell that. Okay. That's why you don't get into that trade because there is no confirmation to sell that. And if you know the method, there is no close below the 13 here on that pattern. So you don't take that trade. Okay. Let's keep going here. Let's go. Let's go to the previous day where it did work out. Okay. Sunday, Sunday to Sunday, this entire week on Pound USD, where was the best possible setup? Sunday open, you have a consolidation, stop on high, dropped. It dropped a little bit now. It dropped. When I switch over to the 15-minute, you're going to see that there was a possible entry there because look at this. It dropped to the initial low right around Asia, and that's where price got rejected. The following day, consolidation, a shallow stop punt, a false little break up to the upside. It drops, consolidates again, and drops. Consolidation, they don't hit the stops, no trade. They don't hit the stops, no trade. Okay. So that's when you got to start telling yourself no stop punt, no trade. If they're hitting the stops, then you have to work, then you have to confirm with TDI and maybe another confirmation, a pivot point or a moving average or the pattern. Okay. Last Friday, there is no stop hunt. Okay. I repeat myself, no stop hunt, no trade. Just sometimes that we get caught up in the that we show up to the chart, and if you only trade in one pair, you're thinking that you have to make money now because you showed up to the chart. You just have to take it, you got to treat your setup. That's there is no setup. It's kind of like you're forcing that trade, and you're gonna the market would discipline you if you force it. Anyhow, let's continue here. So if you notice here, price keeps rising. I'm already back until August 19th. Price keeps rising. No, there is no setup there. Price keeps rising. There is no setup. There is no confirmation. There is no pattern. Now here, there's still no pattern, no confirmation to rise. Right here, they hit the stops, consolidation. Price goes up. You have no confirmation to take that to the downside. There's no close below the 13 EMA. Okay. So this particular pair was not that great. Okay. So let's just go back and look at the clues, the confirmations on this particular setup. This was the only good trade so far on pound USD. So let's break down to the 15-minute where you're going to make your entries. How does this look? Okay. This was perfect. Consolidation. I'm on the 15-minute now. Late London. Price broke to the downside. And it did completely the opposite. Okay. The way you get confirmation is this. You use that 13 EMA, which we call this 13 EMA, and that 5 crossover for your entry. Let's not overthink this. This is consolidation, stop hunt, the false move against their real intentions. So what do we have here? Consolidation, 1, 2, 3 pushes to the low. What is TDI doing? If you haven't seen my TDI video, I suggest you go look at it because this will help you confirm. Look at current price. This black line here is my current price, is the current action. It's in my buy zone. It is basically shark fin inverted down there at that low, and it crosses over. Now, you could have taken the trade here, where you have your green body closing above that 13 EMA, and you take it for about 2 hours to the initial high of the day here, which would have been somewhere in here. Okay. So they're working the stop hunt low. It went the opposite. Why? Start lining stuff up, put the puzzle together. They're down here, price is down there. It crossed over. It crossed over the 13 EMA. Your entry is in here. Your stop loss goes down here, below the low of the day. In this case, let me go back here. If your entry's in here when when the body of the green candle closes above the 13 EMA, your stop loss goes below the low. Now, at this point, it'll be a 36-point stop loss. So if that's too steep of a stop loss, lower your lot size to compensate for that. Because typically you want to put about a 25 to 30 pip stop loss. That's typically what I trade. So it will be down there. But so if the stop loss is too steep for you, lower your lot size. And your first take profit is the initial high of the day. This would have been your first take profit in there, which would have been somewhere in here. It continued to rise. Why? Because it broke right through the market baseline and it kept rising. So from here to here, after 2 hours of trading this entry, you should have gone for about 2 hours. That would have been maybe 35 points. It pulls back a little bit here. Let's just start following along. It pulls back right here. There's your pullback right here. And it kept rising and it keeps rising. Again, your clue is that you don't have a red candle closing against you, closing below the 13 EMA. So you kind of, you got to watch this. It pulls back. It retested the 13 EMA, but it kept rising. If it didn't, just right here, it crossed back down, but never crossed the market baseline, and it kept rising. So that was the only thing you had going there for you. Stop on low, line it up with TDI. I'm on the 15-minute. This is the previous Friday, the same pair. Again, consolidation. Stop on high, drop, and then it pulls back, and then it drops. Okay, so if you took this trade, here, because notice how they went up to that 50-point range up there. Your stop loss would have been up there, right? If you had taken that trade, well, they would have probably gotten you. So anyway, consolidation. They went all the way up to that 50-point stop on zone and reversed. There's your shark fin to the downside. There's the crossover. There's the crossover. If you had taken the trade in here, give yourself 2 hours. This is the 15-minute. You would have been in profit, didn't move much, and you should have gotten out here. Why? Because that's your initial low of the day from Asia, and you've been in the trade for 2 hours. And if you notice, I'm going to give you another clue. It stalls out down here because current price stalls out down there by that volatility band at the low. Okay, another clue. These volatility bands act like your high and low. They're like you're moving high and low. This is like your high. The volatility band is like your low. They're moving around. So when price dropped, it drops. When sideways, it dropped, it drops. Why did it reverse and pulls back on me because they're working that current prices down there at that volatility low down there, and it crossed over. When it crossed over, you should tell yourself it's most likely going to go back up and retest that high. It crossed over and rise. It crossed over and rise. Why did it pull back down? Follow along. It crossed current price, is lining up with the market baseline to the downside. Again, you should have gotten out here because you're trading for about 2 hours. You're not in substantial profit, so you need to get out. Okay. Let's look at, like I said, this works in any pair. I know there were some good moves on pound yen, GJ. Let me bring in GJ in here real quick. Let's see, where's GJ at? Okay, GJ. There's GJ. It's very volatile right now. Let me go to the 1 hour again and start this all over again. You got to see it all over again. So when you're trading in front of your computer, you get to see this one more time. If you noticed, price keeps rising. It's been rising since September 16th. Rise, pulls back, rise, pulls back, rise, pulls back. And it keeps rising and it keeps rising and it keeps rising. Again, there's only if a pair gives you one good setup all week, that might be the only trade you need to take on that trade because everything has to line up for you. What did they do here? They worked the stop hunt low, and it was rise. And look at the rise was right back up to that Asian high, to the initial Asian high. So let's break that down. Let me clear this up. Let me drop down to the 15-minute. So I'm going to break that down for you. So when you see it again, just have confidence in your trade that everything's lining up. And if it doesn't line up, not a big deal. That's where your risk management comes into play. Okay. Sunday, market open there. There's that shadow line, that vertical shadow line separating Sunday, Friday to Sunday. Anyhow, Sunday, market opens. Price is rising. Line it up with TDI. That's not a trade. London finally opens. They start to push to the downside. They push to the downside hard. Why? Because they want everyone to chase that sell. Okay. The weak sellers are selling in here, putting their stop losses in here. Stop loss, stop loss, stop loss. Or they're going to get stopped out. The ones that are selling because the pullback is going to get them. But anyhow, there's the pattern. W pattern to the upside. Line it up with TDI. You have your shark fin down there. You have your stop hunt down here. You have your second leg closing above the 13 EMA. That's your confirmation to get into that trade. Look at this. Drops, rises. Let me zoom in some more. I want you to clearly see this. This is all market behavior. I want you to clearly see this. Okay. There's my shadow vertical line. That's my weekly line where Sunday starts. Let's break this down and apply it. Go back and so you have consolidation, Asian session. That's my initial high for Asia. London finally opens, London session. They pulled to the downside. This was a lot of pips again, but there was no pattern to get into that. That will come with more experience. So they did stop on low, but the real move was to the upside. We're not taking that. We're not taking that. We don't trade Asian session. I trade the London session. There's your pattern to the upside. There's your W pattern to the upside. I'm gonna break this down and you can go back and review and I'll end this video here because I'm not trying to make this video too long. and I'll keep breaking down little bits and pieces so you can start mastering one thing at one pattern, one setup at a time. Okay. The stop hunt, we already know. There's stop hunt high, stop hunt low, stop hunt low rise. Why did it work out? It worked out because everything lines up with TDI. It worked out because it lines up with TDI. Shark fin low cuts in. Remember, my volatility band here acts like my low, my moving low, and the volatility band high acts like a moving high for me. That's the way I see it. So it drops, it rises. Notice how I don't have that my confirmation closing above that 13 EMA. It pulls back. That's where it pulls back right here. And then it goes, crosses back, crosses the market baseline. That's where it took off there. If you had just simply waited, this pair is a lot more volatile. So you probably have to lower your lot sizes. Because look, current your confirmation candle, second leg closes above that 13 EMA and the 5 EMA, your entries on the next candle, and you go right into profit for the next 2 hours. 1, 2, 3, 4, 5, 6, 7, 8. And then there was a pullback that probably scared a lot of people out. And it shot right back up to just a little bit above that initial high of the day. Okay. And always remember, why was there a big pin, a big pullback? Because everyone, the weak buyer, is chasing this trade. They're buying, they're buying in here, putting their stop loss in here, putting their stop loss in here. The pullback, this pin takes them out of the game. Or if you did take it from down here and you took the trade and you move your stop loss in to break to guarantee profit, the pin took you out. Okay. So and it finally looked in New York session. The New York session was the reversal. Railroad tracks to the high, which was here, pulls back. There's your pullback, and it drops. And it drops. And why did it consolidate here? I don't really trade the New York session, so it ends in consolidation, and they start the new day again. So again, I just wanted to explain a little bit about these stop hunts, and all you got to do is put the clues together. Let's break down one more. Let's break down this one. This was on September 18th, last week. Okay. The new day starts. The new day starts here for me, 2 p.m. California time. It starts to drop, starts to drop, starts to drop. Notice how it's separating away from that 13 EMA. That's fine. We don't trade that. We don't trade that. We trade we trade the stop hunts. Stop hunt stop hunt low, rise. Ask yourself another clue. How long did they work? They set the low here now, right? Look how the next candle, 15 minutes goes by, 15 minutes go by, 15 minutes go by. That's 1 hour of them working that low. Finally, you have your close above that 13 EMA, which was, look at the W pattern, current price down there on my TDI, which is in my buy zone. And they're down there with what did I told you about these volatility bands? These volatility bands act like my moving low. The volatility band up here acts like my moving high. Okay, they're trading between high and low. Those are the best setups you're looking for. Okay, so you have the W pattern down there. You have your W pattern down here, stop on low. You have confirmation to get in right there, and it rises, pulls back, rises, pulls back, rises, 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 and it starts to separate from the 13 EMA. Your take profit is the first take profit is the initial high from Asia, and it kept rising. That's typically where you would have got out somewhere in here. Why? Because look how they're holding that high for over an hour, even though it kept rising some more. But that's typically where you get out before the New York session opens. So hopefully, I'm cleaning some stuff up. Again, I haven't done a video in a long time, so I'm gonna get back into the groove of things, into the in the rhythm, and as far as breaking stuff down. But this is just one simple. Just wait for the stop hunt and confirm with TDI. If you're not really familiar with TDI, go look at one of my older videos that I have on here on the TDI for entries and exits. I will try to update that video here in the next couple of days. Another newer video with it'll be stop hunts with TDI. Stop hunts with TDI. Okay. So basically go back. If you don't have these stop hunts boxes, leave me a message or my Telegram. It's below the description. Go to my Telegram, follow me on Telegram, and send me a DM. I'll send you these the stop hunt boxes up there, just to clarify things. Okay, and and like I said, use this indicator to go and start breaking down. It doesn't matter the pair you bring in. Bring in whatever pair you want and start analyzing of what the hell's going on. Okay. Again, not every pair is going to be perfect. That's why you don't take the trade unless you get the pattern. Okay. Start finding these clues that I'm pointing out to you. Anyhow, I'll see you guys on the next video. Like I said, I should be doing another video here in the next couple of days in regards to an updated one regarding TDI. And we'll package this up, the stop hunt with TDI, because that's what you're gonna need to not get faked out on a they might go stop hunt high, it'll drop, but then it'll shoot right back up again, and TDI will take care of that for you.